Hello everyone, welcome back to Upside Down Data. Today I want to talk about Chainlink, what some of our indicators are making of Link's current price action, and some other things to consider about Link in a bear market. If you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter, where we put out regular updates about our risk indicators and more. I think anyone who's been following Link obviously has been feeling pain. It's not been fantastic, especially with this big market sell-off with Link falling down as low as $5 in the height of the selling, now sitting at around $7. And so what I want to do is look at some of our metrics here, just get a sense of what's going on with Link, if there's any signs of relief, and some other things that we might just want to pay attention to. So to start us off, I want to talk about our momentum bias indicator for Link. The indicator I haven't talked about before with Link, I don't believe, but it's one that I think offers some useful insights. So this is a model, if you're not familiar, which basically tries to capture the prevailing momentum in the market, hence momentum bias. The idea is that is the momentum biased to the upside, and that would be denoted by being above zero, green, or is the prevailing momentum biased to the downside? That would be red down here. And zero represents the average amount of momentum in Link, and of course that is overall positive given Link's massive price appreciation over time. And then this is the values here are denoted in standard deviations. So 1 would be one standard deviation above the mean, -1 would be one standard deviation below the mean. So when we're looking at this, what we can see is that there's different kind of profiles that tend to categorize different times in the market. So the yellow line here is just the price of Link across time. And in a bear market, what you tend to see is a lot of time being spent in the red, more times being spent in the red than in the green. And then anytime we come and try to kind of reclaim a positive momentum bias, we just get very quickly rejected, right? We come up, get rejected, come up, get rejected, come up, get rejected, up, rejected, and then rejected, and that's kind of characteristic of bearish times, right? That throughout this downtrend that Link had in 2018, kind of going into the middle of 2018, we're really showing that bearish pattern. And it did start to relieve itself a little bit, kind of as we came back up through 2019, which in some ways is starting to kind of show that reversal into a more bullish phase, which is then what we saw. And then bull markets tend to be categorized by more time being spent up in the green than in the red. And what you tend to see is kind of these big moves up into the green, some time in the red, maybe some equal oscillation around zero. Then you tend to see a lot on this indicator that in bull markets in the build-up phase, you'll see this kind of equal oscillation, just kind of the bears and the bulls trading off, prevailing upside, prevailing downside momentum, etc. Even here with the March 2020 crash, that would be here. And then you're just off to the races at a certain point where once the asset starts going parabolic, you just start spending an awful lot of time in the green until you ultimately go up to the top. So you can see throughout this whole run here, only a few times where negative momentum was really starting to kind of rear its head. The rest of the time just moving to the upside. And this is very much a bullish structure on the MBI when you see this. But then, even coming into the summer, and even after that, we actually had been kind of overall showing a more bearish structure, right? We came up, weren't able to start, we had very, very briefly started to do maybe this kind of equal oscillation around zero like we've seen in the past over here. And Bitcoin actually did the same thing on its MBI, which at the time seemed like it might have been possible. We're building in for another big push to the upside. But then once we broke down out of that structure, that thesis got questioned. And then we've really been showing a bearish structure ever since. You see us, just like back here, whenever we try to peek our head above zero, reclaim a positive momentum bias in the market, we just get rejected and negative momentum takes over and has its day and keeps dragging price down with it. You can really just kind of see this negative momentum just dragging price down through here with just little shows of strength by Link, but ultimately this very oppressive downtrend. And what's notable is that with this big sell-off that we had following the Terra Luna debacle, we actually printed our lowest level on the MBI, meaning that in terms of standard deviations, we hit a full standard deviation below the mean, which is lower than we've ever gone before to the downside. We've hit one standard deviation above the mean to the upside. We've never hit that to the downside before. So does that mean that has to be a bottom, right? I think that's a question some people might ask. If we're going down these really deep levels, that means it has to be the bottom. Well, no, absolutely not. If we're going into a full-fledged bear market, and even one that might be worse than the bear market experience back here, certainly momentum bias could get even stronger to the downside for an asset. But it certainly seems plausible that if we're this far extended to the downside in momentum bias, that there might just be some reversion back to the mean that might happen. So one thing that we could watch for going forward is if we start seeing an uptrend in this indicator. So similar to what we saw in the summer of 21, you'll notice that the bottom of the MBI, when the downside momentum was strongest, was actually here. And then we printed a bullish divergence here where we put in a higher low right here, or a hidden bullish divergence right here, where we set in a lower low in the price but a higher low on the MBI, and then off to the races we went. So that could be another thing to look for. Do we start printing higher lows on the MBI going forward, even if price might have to keep going down to some degree? That could be a precursor to moves back to the upside. Time will tell, but something to keep an eye on. So I think there's some interesting things to look at here from more from a macro perspective, and this really, in my opinion, does just show that the bear market structure is still very much intact. And really, that will get questioned from this model's perspective. We might be able to flip to more of a bullish outlook if we start engaging in more of this behavior where we're spending more time in the green than in the red, or at the very least doing this kind of equal oscillation around zero again. Something to be watching for in future. Now, another model I want to talk about is the trend confidence indicator. So even though the color scheme here is similar to the MBI, this is not the same model. It's not trying to get at the same thing. Trend confidence indicator is all about the current trend the asset is in and how confident we should be in that trend continuing. So if you're in an uptrend and the TCI is green, that's good. That means the uptrend is likely to continue in the model's perspective. But if you're in an uptrend and the TCI flips red, that's concerning. That might be showing that this uptrend is losing some of its steam. And then oftentimes that can precede moves to the downside. So you'll see, we flipped red as we kind of went back into this consolidation over here. I'm just showing you the data from early 21 just to zoom in a bit more so we can see it more clearly. Then we flipped green for the all-time high, but then very quickly flipped bearish for this big capitulation down into the summer 21. Stayed red this entire time, but then switched back to bullish right at the bottom, basically, more or less right at the bottom. And that's the advantage of the TCI. That's what I really like about this model, is it's oftentimes either able to front run big moves to the downside, or at the very least identify them very quickly when they do happen. So you'll see it identified this as being a top very quickly, flipped red as we went down, and then flipped green very quickly when we actually hit that reversal point. And so that's what I find to be useful about it. And so similar to the MBI to some degree, we also have gone quite deep into the red on the TCI as well, suggesting that it says this, it says this is a downtrend, and you should better believe that this is a downtrend, right? This is, we can be confident in this downtrend existing. That being said, though, one thing that we can look at is short of the TCI flipping green again, we can start looking for these kind of divergences, right? If the TCI is trending up while the price is trending down, that might be suggesting that a flip back into the green is coming, and that can sometimes then play out. So that's, kind of the earliest signal you can look for, maybe kind of a weakening of the trend to the downside. And then once you flip green, that's kind of what it's making its call that I think move to the upside in this example is more plausible. Or, if you're going up, be a move to the downside. You can see that happening here. It's moving down, flipping red right around here as we correct it down. So the nice thing about this model is we can actually probe it to ask it what specific price level it's watching as being this cutoff between bullishness and bearishness. And for Link right now, that's $10. So, notably higher than where we're trading right now at $7. And so that's really, from the model's perspective, until Link can show enough strength to reclaim that level, at least right now, it shows it has no reason to be too optimistic, or it's suggesting there's no special reason to doubt this downtrend until we might reclaim that level. Now, this is a dynamic level. This will be changing with time. So it's very possible that this will continue to fall this critical level, and then should price then slice through that, it would get more bullish. But right now, there's quite a bit of room between what the TCI is looking for and the current price level. So across these, I think the overall kind of sentiment, which is in some ways maybe not surprising, is that this is, in a more macro perspective, this is a bear market by the profile of the MBI. And for this local downtrend we're in, we should believe it from the TCI's perspective. Now, that's obviously quite, not very hopeful. I think, it's not suggesting that we're just going to go off the races immediately. But I also want to talk about the flip side about Link as well. So I'm just flipping over here to the price chart. And that's kind of the longer term prospects of Link. So, when we just look at the whole Link chart, it is a pretty impressive asset in a lot of ways. It's pretty much its entire existence, it had been in an uptrend. Even from the lows it printed all the way back here in December of 2017, it kept just putting in higher lows kind of throughout its entire time. Really, this big move back to the downside now is the first time it's really started to put in lower lows on a more macro standpoint, taking out the summer lows and then going back and even taking out some of these lows here, technically in this down into the $5 range. But it's been quite impressive on the move up. And one of the reasons why we might think that, Link has done especially well is that it's a very fundamentally strong asset. And we know from research in traditional markets that fundamentals tend to matter a lot in bear markets, and then they don't tend to matter as much in bull markets. So maybe that's one reason why Link did so well in times even that were pretty bearish in the market, like the March 2020 crash. It is very strong fundamentals, relative to some other crypto assets that are out there. And we can see this through different metrics, just kind of looking at across different things. One thing we can look at is just its place in the market relative to its competitors. So I'm showing you here on CoinMarketCap the oracles. So if you're familiar with Chainlink, it's a data oracle. It's all about supplying data to other blockchains, feeding their smart contracts with outside data, like price data of other assets that are outside of whatever the local chain or local protocol is. That's what Chainlink's all about. And there are competitors, but you can just see the gulf, the massive gap between them, where Link's sitting at over 3 billion in market cap. Its next competitor is only at 200 million in market cap. And then as you go down, it falls off very quickly. There's just not a lot of competition. Link has kind of locked up the oracle space in crypto. And you can also see this just in the sheer number of applications and chains that rely on it for their outside price data. Just look at this. It's massive list of protocols that rely on Chainlink for their outside price or outside data, data outside of their protocols. And so that's part of why Link is such a strong on a fundamental aspect. And I should also mention that Jay over at Daily Crypto Analysis put out a fantastic video about the fundamentals of Link. I'll link that in the description if you go check it out. And these are some things that he talked about in that video, was that, Link is really kind of stands on its own in terms of the Oracle space right now. And that gives it a lot of buffer room potentially. That doesn't mean that its price can't fall, certainly. But anyone who's bullish on the Web3 space and bullish on DeFi or anything in the Web3 space that relies on outside data, Link is really kind of the central core of that. It's kind of the infrastructure that's powering a lot of the Web3 space right now. And that's why a lot of people are quite confident, even if Link gets pounded in a bear market, that it will at least be able to survive. Because at the very least, the fate of Link is really kind of tied to the fate of Web3. So, if Web3 were to die, then of course Link would die as well. But, anyone who thinks that Web3 will stand the test of time and actually be, kind of a big deal going into the future, Link is positioned well to capitalize on a lot of that upside. And there's some other things that Jay talked about in his video. I highly recommend you go check out that video to get a more in-depth picture of the full kind of macro perspective on Link. These are just a couple things to keep in mind with it. So even though, the MBI is showing that we're definitely in a bearish territory for Link, and that the TCI is saying that this downtrend is quite believable still right now, if you zoom out and think about this as, a longer term investment, there are reasons to be optimistic, even if we have to endure some shorter term pain. So, obviously not financial advice. You should do your own due diligence before investing in anything. But personally, I see Link as being one of the more likely cryptos besides, Bitcoin or Ethereum to be able to come out of this bear market intact. Doesn't mean that we can't keep on falling further, but it certainly is something to be looking for. Now, one final thing I did just want to bring up in terms of, thinking about levels to watch as we fall down, is just looking at, kind of in recent times, where is a lot of the volume transacted with Link? Because this will give you ideas of resistance zones and support zones. And you can see that Link is kind of wicked down close to this big kind of level of potential support, or a lot of volume that transacted in kind of this $4 to $2 to $3 range down here. And so really we're kind of pushing up against maybe some resistance. A lot of volume transacted back here up through these levels. And so really what I would be looking for with Link is that, there might be some support that'll show up here, at least more in the short term if we come down here, but then these might offer resistances. And what I'll probably be doing is comparing these levels to what the TCI is thinking, etc., to be thinking about how believable a move back to push up through these would be. And especially if we start reclaiming positive momentum bias, that would be maybe a suggestion we could back up. But again, regardless of what happens in the short term and how deeply we need to correct, I do think there are more fundamental factors that can let us be a little bit more hopeful that, Link isn't at least going to go to zero. That'll survive some bear market, even if it has to come down to these deeper price levels. All right, if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. Put a lot of updates about our indicators and more over there.